Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate Business Podcast. Yes, it is Wednesday, May 4th, 2022. Only around here, you wouldn't know it's May because the weather is just so awful right out of the gate. You know that? With me today, I have award-winning superstar, loan officer, top 1% in the country, Mr. John Kolb. Good morning, John.
Good morning, everyone. How's everyone doing today?
Oh, wonderful. And also your partner in crime, Mr. Harvey Freed, the host of the Hardcore Mortgage Real Estate Business Show, heard every Saturday morning, 97.1 FM from 9 to 10. Good morning, Harvey.
Good morning to you guys.
Good, gentlemen. Let's get hardcore right out of the gate. Okay, we all know the market has been changing. We all know the inventory issues. We all know about the Fed coming out today and saying that they're going to continue to tighten and raise rates, whether the market has it priced in or not. Let's not get too crazy about that because rates are going to continue to go up. But let's discuss right out of the gate. John Kolb, I'm going to start with you. You have indicated to me you are so busy. What's going on in the market, on the street with your realtors?
Just a lot of offers going out and a lot of offers getting accepted. And I think you're going to lead into some of the crazy caveats that some of these purchase agreements have in them to make these offers get accepted. But in my opinion, it's do what you need to do to get your offer accepted as long as you're going to live up to the contract. And it's just a good time of the year. We're starting to get real busy. Rates are, yes, definitely on the rise. I think the playing field is starting to level out a little bit. These low budget lenders that are out there that are BSing everybody, as well as the what did we call it? Back of Erica. They're just not doing what they live up to. So that puts a good light on us as a reputable lender who works our behinds off to make sure that we get things done the right way and efficiently for everyone.
Yeah, listen, it's more important now more than ever, because right now the purchase market and our purchase business, Harvey Freed, has never been busier. Okay, the purchase side of the transaction of the mortgage industry has never been busier. And with the laws of supply and demand, the lack of supply, the high demand, there are some things out there that people need to be prepared. And Harvey, you always talk about education and you always talk about the need to be with experienced people. But what are your realtor partners talking about in the market right now?
The lack of inventory out there is going to continue here through 2022. Like John said, some of the offers are getting accepted. And as long as the buyers are willing to live up to the agreements that they're putting in writing, then the closing will go very smooth. Generally speaking, I just had recently down in Florida, appraisal guarantee, $7,500 over appraised value. And it turned out actually the client ended up getting the house for a little bit less money. So at the end of the day, if you write your offer aggressively, you're willing to spend the extra money and live up to what that purchase agreement says, then you and your real estate agent are going to have success and get that offer accepted.
Yeah, the purchase applications are on the rise right now. And there's a certain amount of why. Why are people in this market continuing to buy, continuing to pay overpriced, overvalued, overlisted, continue to write in appraisal guarantees? Well, some of the reasons are that people aren't waiting anymore. They're not waiting around. They know rates aren't going down. They want to get in the market. They know right now that if they buy a house and in the second half of the year, even next year, the house prices could be higher than they are now, John Kolb. So we know the Fed, they're meeting today. They're going to raise rates, more houses. Are they coming on the market? Yeah, but not that many. So we're seeing purchase applications on the rise. The why is people aren't waiting around anymore, John.
Yeah, I mean, but it's a new year, right? It's a different year. We're back to a little bit of normalcy with being able to do what we want to do without having to wear those diapers on our face. And, so more and more people may be waiting till kids get out of school to start putting their house on the market and start looking so that they move when their kids are out of school and there's more time to do so. And then they start the new year with a new school district. So maybe it's just getting back to a little bit of normal with how our seasons work here in Michigan. And, I'm good with that, but we just got to stay consistent.
Yeah. Hey, Harvey, more houses coming on the market. Yes, but not that many. What do you say?
Yeah, not enough housing on the market, that's for sure here. And it's not going to slow down the buyers out there, even with the bump in interest rates, 2% higher than we were at last year this time. Again, this afternoon, the Fed's going to meet, almost certain that they're going to bounce up the Fed funds rate, probably another half, and leaving them some room maybe in June or throughout the year to even bump up another quarter. So two things happening. Interest rates continue to go up. The home appreciation's going up, sort of offset that. They're definitely trying to slow down this economy here and stimulate some growth. I just, with the war going on in Russia, there's a lot of uncertainty. One thing that's certain is they're not buying these mortgage-backed securities anymore.
Well, certainty is this. John touched upon it. Appraisal clauses, appraisal guarantees. Here, I'm going to share with everybody today. I thought it was great. We all know if a property doesn't appraise for the purchase price, the buyer will come up with X amount in cash to bridge the gap between the approved financing and the purchase price. Okay, so we know that. That's what an appraisal guarantee is. But yeah. I was emailed something that I thought was very, very creative. And Harvey said that he knew about these things going on. I wish I would have known about it. So I just rely on the information I get. Somebody put in there, okay, it's right here in writing, if you want to make your offer very creative, you put things in like if their pro hockey team makes the 2022 Stanley Cup Finals, we'll throw in 2 lower level seats to the home games. That's an approximate value of anywhere from, $1,000 to $3,000 value. And if you know that person is a hockey fanatic, that might, lend itself to the relationship and tip the scales. I think it's creative. And basically, it's not about the hockey tickets. It's not about throwing that in. It's about getting creative, John Kolb, with your offer. I mean, it just brings more attention. And if that's what breaks a tie, if that's what breaks the 50-50, why not do whatever it is you have to do, which is what you said, right?
Yeah, I'm reading over your clause, and it's fantastic. I love it. It is very unique, and I think it just leads to everyone smiling and saying, you know what, this could be a good transaction, and we like the creativity behind it. So you got to do what you got to do to make these offers get accepted, and I love that they're offering some hockey tickets to if the team makes it to the Stanley Cup playoffs.
Yeah, I think in the spirit of camaraderie, of friendship, of relationship, of tipping the scale in your favor, this really shows some creativity and some really uplifting kind of, a joyous, joyful, playful nature in the home buying process, Harvey. And we try to make it fun, right? It should be a fun thing. This just shows that these people have got the right attitude about it, doesn't it?
Yeah.
Yeah, I liked it. It's like you said, tipping the scales, standing out above the crowd, making your offer look a little bit different in today's marketplace. It started with offering the seller to pay the seller's transfer tax, offering to pay the seller's title insurance, some of the fees that the seller would pay. Now a buyer wants to get his offer looked at and throwing in some additional language in there. Hey, Detroit Tigers make it to the World Series, then I'll also buy at least one game to the final World Series game. I'll pay the money also. If you
wait. I've got a great solution to this housing market problem in Michigan. The Illiches and the Fords need to get their teams better so that we can offer something like this in our contract. So, I mean, you can just blame it on the Illiches and the Fords right now.
Oh, boy. All right. Well, I was on email. I emailed Steve Jacobson. He is the chairman and CEO of Fairway Independent Mortgage Corporation. He sent this out to everybody. I'm not a big email guy. I don't reply all. I don't do all those crazy things. But I did email him privately, and I said, this is fantastic. I mean, it's awesome. It just goes to the spirit of people and, just trying to tip the scales in their favor with a great attitude. And I love that. All right, let's get down to some more hardcore stuff right now. Fed meeting today. Why do we care so much and how does it affect us? People say, well, it doesn't affect you. Oh, no, no. It directly affects us. And the reason why we talk about it, listen, it's not going to stop people buying houses right now because supply and demand does that. Okay. More buyers than sellers right now. Sellers are commanding higher prices. There are just a plethora of millennial buyers out there buying homes, John. The Fed meeting today, they know it. Okay. I was on the phone with a realtor today, and she and I were talking. Houses that were $450,000 just 2 years ago are selling for $800,000 right now. Why would somebody sell something for $450 when they could get $800? Why would the Fed lower the rate when they can raise the rate, knowing that people are still going to consume? American consumers, and that's what's happened. Allegedly, there's this inflation that's running rampant, running out of control. I don't share that, but that's my opinion. I'm not an economist. But why are you going to lower rates? Why wouldn't you continue raising the rates to temper this inflation? That's what's going on. John Kolb, they're going to raise the rates. It's not going to stop people consuming.
No. I mean, we talk about this all the time. It may cause somebody to not be able to get into that top tier purchase price that they were looking for. They may have to level it back a little bit. It may cause somebody who's a first-time home buyer not to be able to qualify for some of the homes because of the market being increased for both first-time home buyers and repeat buyers. So it'll cut some people out of the market, but that's not going to be an issue because the supply is not there. So we've got way more buyers than we have homes for sale. And if we cut some of the buyers out, that's still going to leave a surplus of buyers versus sellers, and we'll still be okay. Yeah, we're just because the rates are going up doesn't mean that it's the end of the world and Chicken Little, the sky is falling.
In the 1980s, John, this is a fact. 1980, 81, 82, rates were in the high teens. People did not stop buying houses. They bought them. They bought less, but they did buy houses, and you saw what happened. There were also less buyers, by the way. I know, John, because I'm going to get my dig in. I was around for that. You weren't. There you go. Harvey Freed, rent versus buying. Please stop that. Please stop the rent versus buy. All right. Don't give up the hunt for a house. It's not easy, Harvey Freed. However, if you're pre-approved and you're out there, you're going to find a house, right? I mean, you can't wait anymore. There's no waiting. You got to get out there. You got to grind it out, right? Rent versus buying. Come on.
You got to plant your roots down deep. You know, people want to get married and have children and get jobs here locally. They're not going anywhere. Yeah, you definitely want to take a look at home ownership. Rates still are going to be hovering around what we would call 10-year lows or 30-year lows because they're going to be back to a more of a normal interest rate. But rising rent costs, landlords are also borrowing the money. Some of them have decided that they're going to go ahead and increase between 10 and 22% this year. The numbers are across the United States, 10 to 22% rent increases. So if your landlord goes up to $50, $300, it's just going to make home ownership still that much more affordable.
Hey, Harvey, listen, if somebody's paying between $1,200, here, let's just dummy it down a little bit because so I can understand it. If somebody's paying between $1,000 and $1,500 a month in rent, Harvey Freed, what's their best mortgage program? How much money do they have to come up with, and how much can they afford in the way of a house, in the way of a payment if they're paying $1,500 a month in rent? What's that get me in a mortgage?
Yeah, some raw numbers here. On the low side, on a 120 mortgage with lower property taxes, you're looking about $8,500 and $9,500 out of pocket completely. Closer to $180,000, layman numbers, closer to $12,000 to $13,000, depending upon what the property taxes are. Again, with 3% down conventional purchases and even some zero down programs, these families should take a look at rural development loans, USDA. You could just be on the outskirts of town here and some of the other counties, Genesee County, Livingston County. These are all rural development areas, and everywhere across Michigan, you could probably take a look at a zero down program. So again, minimal down investment. It's a lot less expensive to become a homeowner than rent. And of course, one day laying down those roots deep, you're going to have some equity there. And that's the key about home ownership, having some equity and ownership that you might own something down the road.
John Kolb, last but not least, on the topics that you just completed, and I wish Becky were on. Becky's at a closing. Lisa Lawson couldn't be on today. She's the queen of the MSHDA loans. Becky's doing a lot of MSHDA. John, you're just completing some MSHDA loans. Michigan State Housing Development Authority loans, their down payment assistance programs. You know, I always heard this was the old adage, right? Because I'm old, I'm throwing that one in there, John. The old adage was, I can make the rent payment. I just can't come up with the down payment. Michigan State Housing Development Authority, DPA assistant loans. John, how much do you really have to come up with?
You got to come up with 1% of the purchase price. That's your minimum amount. But these programs are different. You know, they're fantastic programs, but they're not for everybody. And remember, once again, once we get our whole file approved and CTC, we have to send it to the MSHDA to have them underwrite. And MSHDA then can come up with their own conditions and or say yes or no. And that did just recently happen to a file of ours. So once it leaves our office, we lose a lot of control. Now, that's a very unique situation. That was one in 50 maybe. And but you got to be careful with that kind of stuff and make sure that you're dealing with a lender that knows what they're doing, knows how to get these files done. And we are on the approved list for MSHDA. We get a lot of calls because we are on that list. And it's nice to have that referral source as well.
Harry, I'll put a little twist on that if you don't mind. Definitely great success with it. We're one of the top offices to deal with due to how we know how to set up a file initially. I've just closed a MSHDA last month at 26 days. So not only did we have it ready to go, the state of Michigan earlier last month wasn't that busy. Their turn times are down to 3 or 4 days. So it's a real easy transaction. John mentioned you got to fit within the box, but a viable way to purchase a house. And again, just 1% requirement to come out of pocket. MSHDA has the $10,000 down payment assistance, and that will cover just about all the fees to get into the house.
Well, I'm going to tell you this, guys. I take it for granted that our turn times are the best in the industry because we do everything in-house. We process, fund, close, underwrite, do everything in-house. We do get need on every other program other than a MSHDA that has to leave our office. They give us the stamp of approval, but we have delegated authority on every program. All right. And again, all in-house transactions, our own processing, funding, closing, underwriting, everything. So I apologize. I take that for granted. Not everybody does it that way. We've only been doing it that way for over 30 years. And I appreciate you guys reminding me. John Kolb, your last thoughts of the day before I tell everybody this podcast is brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation. We are an equal housing lender. 2289 is our NMLS number, which means that we are the best in the business. John Kolb.
Yeah, I mean, like Harry said, we are celebrating our 30th year in the business this year, and hopefully we'll be doing something fun for the company to celebrate. And that just leads to how well we do things. How our ratings are on both Better Business Bureau, Google, Yelp, whatever you want to look at, just that we always do things the right way and try to do what's best for you. I always say, what would John do? What would I do for myself? And that's the way I try to move forward with everything. So give us a call. Let us know how we can help.
Well, we appreciate that, John. Mr. Harvey Freed, wrap it up for us, buddy.
Well, it's time for everyone to pay back a little bit to the government. Fed funds rates continue to increase. U.S. Treasury to pay down $26 billion in the second quarter. No surprise that mortgage rates could continue to climb, along with home equity loans, credit card debt, and other things. So be sure, if you're going to be purchasing a house, be sure to get approved, understand the numbers, and get in and get with a qualified lender like us. 1-800-LOW-RATE, the best mortgage banker.
Well, I will tell you this. I wish Becky was on. I wish Lisa Lawson was on joining us today. We will be doing the Hardcore Mortgage Real Estate Business Show this Saturday from 9 to 10, 97.1 FM, Harvey Freed. Harvey, who's our guest this weekend?
I've got Michelle Sayward coming in with one of her agents who's very qualified, who just moved back to town. Her name escapes me, but I can promise you this. Tons of experience. Michelle always brings a lot. That's eXp Realty downriver.
Yeah, Michelle Sayward is on the show. She's awesome. A wealth of information, knowledge. We're talking about, we bring people on, John Kolb, Harvey Freed, that actually work for a living, that are on the streets. They don't just sit behind a desk. You got to be out, going ahead and taking the temperature of what's going out on the street and forming those relationships. This podcast brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender, produced and directed by Roberto Beauchene. He is the man behind the curtain. He does a fantastic job. And I just got to let everybody know what's going on right now is unprecedented. We are going to continue this. Last prediction by Harry Glantz today. Remember, on January 19th, I told you we would never see mortgage rates as low as we saw them in 2020 and 21 ever again in our lifetime. I'm also going to tell you that for 2022, interest rates are going to continue to go up. Okay. But listen, that doesn't matter because people are buying houses. People are making money. The economy is going strong. We've got the lowest unemployment rate in 50 years. That's all great news. So everybody out there, there is no such thing as waiting. The time is now. If you're waiting for a house to come on the market, it might not be there. If you're waiting for rates to come down, they might not come down. If you're waiting for home prices to go down, certainly not going to happen this year or next year. Okay, so right now, get with somebody at Capital Mortgage Funding. We will get you that bona fide pre-approval letter. That means we've underwritten the loan and collected all the documents, and you're good to go. So all our realtor partners out there know this. We look forward to the show, Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding, powered by Fairway. Michelle Sayward this weekend, all the great consumer advice. We'll see you then.